Forex Focus brought to you by IG. Taking a look at the Australian dollar here, a major U.S. pair in Forex markets, and it's been falling pretty substantially, getting close to some historic lows. And let's first take a look at the year-to-date chart. You see a pretty significant fall. And this, especially just looking at the last month, and then we'll widen out and widen out and widen out. The highs in July near 69 cents. And as of today, trading close to 65 cents. That's less than a month where we've seen about a 400 pip fall. Huge, huge move. A move of 4 pennies in about a month is, it can sometimes be, a year's worth of movement or half a year's worth of movement in about a month's time. Why is this occurring? We'll get to in a second, but just worth noting the recent fall and also the price level that we're at. 65 cents has been the low thereabout for 2023. You can see in late May, early June, traded on either side of 65 cents for a couple of days. Bounced back all the way up to 69, came off a little bit, recent trip to 69, and now we are where we are, closer to 65 cents. Once again, why is this happening? Well, you'll remember that both geographically and economically, very close ties between Australia and China. And a lot of times traders will look to the Australian dollar for its relative better liquidity than a Chinese stock market as a substitute for trading Chinese stocks. And you can see the correlations are there, especially recently. These are the last decade's worth of correlations, can go in and out, but usually between, positive 0.25 to positive 0.75. And you look at the recent correlations at the rightmost part of this graphic, and we're near historical highs for correlation at around positive 0.7 between the Australian dollar and the Chinese stock market here. Relatively high correlations for the last several years. And just for context, this is the correlation historically between the US dollar and the US stock market, the S&P 500. And they really go back and forth. A lot of negative correlations in here, a lot of green correlations in here, and spending not a lot of time above positive 0.5 or below negative 0.5, a lot of time spent around zero. Forex and stocks actually don't correlate that often. Two of the asset classes that are usually considered pretty diversified from each other, but obviously not the case. Once again, just showing this historically green correlation between Australian dollar and Chinese stocks, and then especially recently, they've been moving together. Good data for Australia or China correlating to upside in the other. Bad data, as we've seen recently, the trade balance from China came in underwhelming. And we've seen the downside in both Chinese stocks and Australian dollar back close to 65 cents. And just to put a bow on that Chinese stock performance, you can see here the S&P 500 with its less correlation to the US dollar, relatively speaking, up substantially this year, coming off of those lows that we saw in 2022. Chinese stocks, not so much, underperforming the S&P 500 by around 20%, as China's had a rough time getting its economy to recover from the lasting effects of the pandemic. It can be a fickle thing. In the U.S., we've been so worried about inflation and everything else, which are real fears, but can be good fears to have in the grand scheme of things, because it means your economy is moving. Maybe it's moving too much, but high inflation numbers usually coincide with high GDP numbers, high employment numbers, and everything else. China's not been seeing as high inflation relative to the US, and the other economic measures actually haven't been as high as they were hoping. And you're seeing the underperformance there in the Chinese stock market, coinciding with some of those economic fears in China. Now, just getting back to some other price pieces for Australian dollar before calling it a day. There you have a little bit of the reason why we're seeing some downside, as no news has really come out of the Reserve Bank of Australia or Australian interest rates or Australian economy necessarily in the last couple of days. But we're seeing the lows of around 65 cents in Aussie versus USD. And historically speaking, you saw a couple of trading days of this occurring earlier in 2023. In 2022, you saw a month or so of trading below 65 cents before popping back up to about 70 cents. You go back to early 2020 there, and the pandemic fear obviously really moving China lower relative to the US. Australian dollar gets all the way down to below 60 cents, but only for a month or two before popping back up to 70 cents and even north of that for a few months in 2020 and 2021. Then you have to go back all the way prior to 2010 for more prints below this 65 cent level. And again, a few months on either side of 65 cents in the 2008-2009 range amid the financial crisis. There again, a relatively high correlation between stocks in general and the Australian dollar could be seen there. And then you have to go all the way back to, prior to 2003, more than 20 years ago, to get significantly more data around Australian dollar being below this level. So in terms of the last 20 years, this is, kind of rarefied air for this Australian dollar, a level that it hasn't been at too often. But you go prior to 2003 and you see a good chunk of prints all the way down to 50 cents. And of course, this market can go wherever it wants. It can break this level, start a new normal. Maybe those above parity prints that we saw in Australian dollar in the 2010, 2011, 2012 range, maybe those were outliers, and those are levels that we won't see in the near future for this pair. But either way, some historic extremes for Australian dollar. No coincidence that it's coinciding with Chinese data that's been coming out that's been less than favorable. Chinese stocks underperforming US stocks. We'll see where it goes from here. But just as a last piece, looking at the client sentiment from IG, right now 83%, or more than 4 out of 5 traders long Australian dollar, looking for a bounce back. Again, this isn't necessarily an indication of the future. Australian dollar can go well below 65 cents, go wherever it wants. But 83% of IG clients with Aussie positions against the US dollar are long Aussie and short that US dollar. And that's a pretty high level. We look at client sentiments that are usually in the 50 handle, 60 handle, sometimes 70 and 80 handle. 83% is a relatively high one here. Like I say, more than 4 out of 5 traders long this Australian dollar near its historic lows.